first growing up, I thought that, oh, down payment, that's all you ever hear. And you don't ever really hear of closing costs, which is the other side of what's going to come out of your pocket potentially during a home transaction when you're looking to buy a home. What are closing costs? Those are fees and expenses incurred when finalizing a real estate transaction. Fees like loan origination fees. Like myself, I'm a loan originator. Our fee comes in at the closing table, meaning that we don't charge you a dime for your application, for us working and putting our hours into assessing your situation and preparing your loan and all that. We will do all that for you, and then when we get paid once the deal is done, right? Appraisal fees are part of closing costs too. Appraisal fees can come out of your own pocket. So let's say you are approved for a home and you want to put an offer down on this home. Well, there's going to be an appraisal done to make sure that it's worth the amount that, we're saying on the loan, and all that gets done. And it's about a $700 or $800, maybe $600 to $900 appraisal fee. Usually that comes out of the borrower, and that's the borrower's pocket, and that's a part of closing costs. So appraisal fees, title fees, certain taxes, and usually that can sum up to 2 to 5% of a purchase price. Now, one of the biggest pluses of going FHA, like we're talking about, and FHA is just a program. I know you're probably a little bit lost, and I'm trying to make this as simple as possible. And I can explain it to you guys more in detail once we kind of communicate a little bit more. But FHA, that program allows for the selling party, meaning if you're going to buy a home from someone, that person who's selling you the home can also contribute some money to help make the deal close and to push it through, right? So the selling party of an FHA loan can contribute up to 6% of closing costs. Major advantage for first-time buyers, enabling sooner purchases. Some other programs only allow 4 or 3%. FHA allows 6%, which I'm telling you is basically all of it. So there is a world where you can walk into a transaction to buy a home, and all you really do have to pay is down payment, maybe the appraisal, and maybe other couple minute things, and the rest of the closing costs gets covered by the seller. Or if you're buying a new home, the builder, right? Someone built you a new home, they can contribute some of their back end to cover the closing costs for you up to 6%. And like we said over here, usually it's 2 to 5%. That's how much it is. And so basically, the seller can cover all of it, which really is what makes home ownership more obtainable for an individual. Because if someone needs to save for a down payment and closing costs, that's a lot of saving time. You're gonna have to save for a while because they're real similar in amounts. And so to have double is a little bit much. So that's why this program allows for 6%, and that covers this side, you cover this side, and you're able to close the deal. So very important, closing costs, 6% when you're negotiating on a home. This kind of comes in later to play, but a loan originator like myself would talk to a realtor, the real estate agent that you're working with, letting them know, hey, you guys are looking to get the full 6% so you can cover that part of the deal.